G'day guys, this is a live stream and my name is Sam Sari and I'm looking at the crypto market. What I'll be doing is doing another overview on the current markets, look at what's been established, what continues to be problematic, and give you reasons for it and the correlations with the standard markets. So let's start with NASDAQ and SP 500, followed by the US dollar, and see what they're doing, and we'll put those in correlations with crypto, and mostly I'm going to be talking about is Bitcoin. And what you can see on the chart at the moment is something that I'm planning, or I'm guessing. At the end of the day, it is a guessing, but it is based on technical fundamentals and using Fibonacci moving averages and historical support and resistance. So with those elements, I'll give you justification to what I think will happen, and like everyone else, everyone has an opinion. No one actually knows what's going to happen except for the the whales, I suppose. And anyway, let's start with the DX. No, sorry, let's start with the NASDAQ and take it from there. So looking at NASDAQ historically, if you can look at this chart, we had a number of places where we had some deeper pullbacks, and so we have those as references. And you can see back in 2000 we had a massive pullback, and that pullback was pretty much, I suppose, due to this significant incline. And this incline, so it was steep. Let me just get the colors right for a sec. So that it was steep, and then went even more steeper and went parabolic. And the moment it broke that trend, that basically trend line, if you can look at that, it capitulated to a fair bit. And I don't know what the cause of that market was, but that was obviously it was a market crash, and this is a fairly deep pullback. And the rule, I suppose you can use a number of ways to measure that, and there's phases, and ultimately if we use that method, give it take a bit. So let's have a quick look at what caused that. So if I do 2 as well. Give me a sec. What I want to do is just fine tune that. So what it looked like there is a good lesson, but we're going to take it to today's environment. So we had a drop, a bounce, and we use those 3 points as a reference for this retracement or extension, Fibonacci extension. So you can see the key levels. The 1.272 is not really significant. The 1.414 and the 1.618 turn out to be major things, major items on the chart, and it replays this. This is what we look for. So the 200, I think that's the 200 daily moving average, and once we break that, it is a deeper pullback, and I'm sure if we were to do this from there to the top, we get close to about this 0.68, and if we pull this a bit further down, maybe to that level there, it's 0.5 and so on. So depending on the reference points, and I think this is a good reference point there, it's probably the 0.5. Yeah, 0.5 was a major pullback, but you can see the strategy that we used. And so let's move forward. And what I do expect is the 200 moving average. So what we have, give me a sec. So we're just doing a TA on the NASDAQ, which is a technology space, and we risk off market, and crypto falls into this category, and in this essence, it's aligned with the peaks and the bottoms. So what I've done here, if I just remove this for a sec, you can see that my reference points, got the top, got the bottom, got the top, and so far we've got the fib extension of 1. The fib extension of 1.272 and 114 are the major levels. So I've got this box, this 200 moving average. So I do see a bounce from this area, likely a little bounce, and then pull back. Now the psychology of the market is what tends to happen is, and I think this is what happened here, people would have probably entered here, and they got, and so, or the retail they entered, wherever the market is, they entered along the way on the drop, and if they didn't get out, obviously they allow some stop losses, and it's come all the way here. Now what's happening from here, you can see a nice bounce on the fib 1, and each time we have price increase, people will be looking to get out. So as price goes up, the people that bought here or bought there, they'll look to get out because it looks like a bearish market. So sentiments are bearish, market's bearish. We have the inflation releases monthly with the Fed, and what they pretty much dictated that they're going to continue to increase the inflation rates. That will, and if the market believes them, which they do, as you can see the response, that keeps pushing the price down. So if people have an expectation that the interest rates are going to continue to go up, and why shouldn't they? Because of the mass printing, and a lot of countries are going to the dollar, and therefore it just compounds the problem for the stock market. So what happens is, when price tries to go up, those who think that that is enough to capture their losses will exit. And so every time we try to get up somewhere, it will be people exiting. So it's going to take a while for this to go anywhere. So I do believe, based on this wave, we had support here, which was a 618, funny enough, and we had this retracement and a strong rejection. So we have our 1, 2, 3 to the downside. This could be enough, but I think we'll have one more go, and then we have a nice potential bounce. And that bounce, what did I do? I'm just putting it from the previous charts, so you can see the behavior could be like this. So if we can see that, so I'll be looking to short there on the 618, and depending on the candlestick, but it is definitely a solid area for resistance to short, and so we've got this broadening wedge, as you can see on my chart. So the strategy would be, once we get a rejection, we'll put our next trend line in there, and that will help us. So this could be a descending wedge at the end of the day, right? Or a squeezing effect, and it's a bear market, and then we'll have our additional clues to what's taking place, and then we'll see how this bounce takes place, because we've got the 200 moving average, we've got the Fibonacci, so this level is significant. And if I was to add one more layer, which is from the bottom to the top, you can see that my 618 is not that far off, and the 0.5 is pretty much on the box right there. So I do expect, with this correlation with the 200 daily moving average and the 0.5, we'll have a bounce, and then we'll see what the market does when it comes to this trend line. And if it goes above this level, so if we break this level here, then we have a good chance to continue on the trend. If we get a rejection, we can potentially keep coming down. It could be a double bottom, or even a deeper correction, which is fair value and there's a whole bunch of other stuff that I've done in the charts, but that is my take on it. SP500 now we'll have a quick look at, and in a similar space, if I go back to the daily, we have a similar structure taking place with the SP500. If you look at it, let's see what we've done. Let's just clean this up a bit. So I'm looking at the little details there that shouldn't be there for the time being. The SP500 is pretty much doing what the Nasdaq is doing, or vice versa, which is people are looking at exiting. So what I've done here with the SP500 and the chart, you can see the 200 moving average as well on the daily, coming to this major fib level, and you can see that fib level, if I do it from the bottom to the top, if I just move this down a bit, just give me a sec. Also get the bottom to the top, we can see the 618 in this box as well, and if we do the extension, it's also the 618 is as well, and we've got the 414, and you can see the correlation with the macro pullback. So is it going to be a COVID type of scenario? No. So this COVID is very steep. This is pretty much the Fed in control and the market slowly coming down, and when the Fed thinks it's enough, they'll probably change the interest rates, and they will get the market going. So I got this channel. You can see how I got this channel, and it's perfectly in the middle of it. And these bottom of these support lines are the wicks. And so when we look at it closely, we have a lot of reasons why we should think this should come down. We had this, I suppose you can call it a top structure, and that top structure had a neckline that we broke right there, and I've got this red zone that's going to act like resistance. So when we look at it closely, we have pretty much another story in a similar fashion to the Nasdaq, and so we are carefully looking at this. I do expect a good rejection there because of this neckline from that point. So we've got our points there, reference there, and we saw some activity trying to hold it up, and it failed. So you saw that easy rejection, so that is a strong rejection as we come down. So we're just finding a bounce, and again, similarly, we'll approach this market based on the formation that will take place, but this could easily come down, further down, or get to that level, which is a definitely strong rejection area, and then take it further down. And therefore, that's why I'm saying that this area here is a lot of interest, this green box, and then we'll take it from there to see what plays out. So having a mindset that the SP500, the Nasdaq, all looking to pretty much have a nice decent bounce, but potentially keep going down, we'll have a look at the US dollar. So this is the US dollar. And if you watch my previous streams, if I actually probably get the weekly out just to make it easier. The weekly structure, you can see the US dollar breaking this trend line, using this macro structure, and there's a breakout from this macro structure, so we're up now. So there's a measured move, and where these black circles are, that's potentially where we can go. And so when we look at this closely on the weekly, we hit a another resistance level, and which is a 0.618 extension or the 1, and therefore we're finding a bit of resistance, and I dare say that it's not going to really come back much. So what we're having is price dipping, and chances are price will dip and just continue up and then continue up like that. This is an area which is a 618 from one perspective, or the measured move to the 414. So this is where I expect the US dollar to go to. So it's in correlation with the Nasdaq, and it's in correlation with the SP 500. And if inflation rates are, as the Fed does, continue to push it, then there is more global money escaping to the dollar, and unfortunately we're under their control. So that's the US dollar, also giving us a glimpse at what's taking place from a big picture and the justification for being bearish on the crypto. So if we look on the daily, US dollar, if you ever look at it closely, you can see that it is still pretty bullish, and there's no reason why it can't continue on. We might get, as this drops, if it drops that much, or if it drops that much, I think we've already tested that level, so we'll probably just test this level here, or there, ever so slightly, and then we'll just continue on. Then you can be rest assured that crypto is not going anywhere soon as a bullish. So at the moment, if you look at Bitcoin, this is the 8-hour chart, and you can see that there is not much movement besides the bottom. Yep. Once we've got that wick, there is pretty much weakness. This what is this? This is a 8-hour. That is a bearish candle. So it's taken the wind out of the momentum, and so what can take place is pretty much ranging for the time being. Three candles, ever so weak, like look at that, one big strong candle engulfs that, and now we are still stuck below this neckline, and chances are we can have a failed. So if this goes up there, we can have a good failed swing trade. Even better, if it was to break that, depending how it breaks it, it's a good spot to short. Let's go back a sec. What I do have for Bitcoin, not that chart, is this here, three rising valleys. So what we have is price making higher lows. So if this could stay high or low, what we want to see is higher highs. So we really need to see a higher high for us to find an entry around there. So if this wants to go up there, break that, then that's a higher high. Then it turns out to be this chart here. Then it's a good entry for confirmation. But it's most likely to be a double top and descent. So, and that will give our wedge formation of some sort. Or yeah, my drawing's not the best, but that will give us a double top. So we can tell you that fits into, which is not a bad thing. It does fit into the wick-off strategy. If that comes up. So we've got our selling climax with that wick. We've got our automatic response. We've got our ST. And we have that additional point there. So that is aligned so far. If this wedge formation takes place with a double top, then we can expect that price, if price was to break this level here, actually this one here, 2800, what is it, 28,700, if price was to break this level here, then you can be rest assured that the price will come back down to do another test to the bottom. That'll be at the double bottom. And what we need to do is keep an eye on the other markets to see what they're doing. But at this point, it does look like it's going to play that out. We might get a bit of a bounce here, but then again, another failed swing trade, and then back down. I don't think it will go above there. I think this red line will play its role, because it's just showing that as soon as we went below it, there's been shorting, so people are trying to do this rejection, play that swing failure. Maybe we'll get a fake out and come back down. So there's trading opportunities within that structure there as I'm talking. Two strategies at the moment. One is the three rising valleys, which requires price to go above, make a new high, and then look for the pullback and look for a bullish candle to go up. And that will probably fit into the inverted head and shoulders scenario. So that will give us a nice formation to trade, continue to go long. So you go in a little bit as a strategy, and then add more to it as we go. So that is a strategy I'm using at the moment, or an approach. Now, if we look at the total market cap, we have a very similar scenario. I'll come back to Bitcoin a bit. Just let's talk about the total market cap. The alts are involved. And what we have, you can see over here, that was a level of support and resistance. So if you drag that across, that could be another level. Okay, so we've got three levels here. One is currently with the fib extension. So the way I can do this is, give me a sec and I'll just show you, just clean this chart up a bit. So what we're doing is, if that's the bottom, we'll make our measured moves, swing high, so swing low, swing high, and come back down. And you can see this has hit the 200 moving average. I think that's the EMA. Okay, so that's good. And if I was to, and this, because these things work, swing low, swing high, you can see that was the 1.272 extension. You've got the one there, Fibonacci, and therefore this red box becomes resistance as well, based on the direction we're going up. So this fib extension of, I just forgot about that. That's the first fib extension there. And this 0.382 is probably the strong one. And you can see the relevance. There was previous support there, support. So this is going to be potentially our A or our B move. And then we're going to have our C move potentially down there. And that is based on the Nasdaq and the SP 500. Similarly, Bitcoin will do something similar with this wave, and that is the total market cap. And if we will look at the market cap, you can see that trend line, historical trend line that I drew there. A lot of confluence, has a lot of confluence with this 200 SMA, and that's the weekly. So our C area could be there or further down. Really, really hard to know at this point. I'm giving the benefit of the doubt that this could be a good area to buy in, based on the fib extension and a few other things. But yeah, I do see a bounce. It's going to take potentially a while to get that done, but how much of a bounce, don't know. But we can rest assured that we're going to get a lot of rejection. So we are looking at the bear market, and I've pretty much gave you my orientation with the Nasdaq as well, that we're going to have a bounce, rejection, further down, and SP 500 is pretty much in the same boat. All right, now let's look back to, okay, give me a sec. What I want to do is Bitcoin dominance, just to see where it's at the moment. G'day, XTA fan. Thank you for saying hi. So, excuse me for a sec. So this is Bitcoin dominance. And you can see that I had my Fibonacci here and we went above it and we potentially can use this as support. And what it's telling us is Bitcoin dominance is still going to potentially go up. Although the RSI is overextended, you can see historically, even if it's overextended, price or in this case dominance still goes up. So this is a good rejection area at the moment, and that's confluence here along this neckline. So we might get a rejection there, and then we'll see what happens. It could be a continuation to the top or a reversal. I am still thinking that based on my ABC wave to the downside, we're going to have our A, B, C to the upside for Bitcoin dominance, and we might just get there, or even potentially there. So I do see Bitcoin dominance going up, and if I explain that if the market does what it does, and it fluctuates a lot, the volatility increases, they also get smashed pretty much. So we've seen the alts looking weak, so I'll pick one or two alts just to demonstrate how weak it looks. So Bitcoin dominance, I think, will go up irrespective of what happens. If Bitcoin goes up, I think the alts are pretty much more risk, and the Bitcoin, that's why I'm just focused on Bitcoin and trading really. At this point anyway. Now what we have, let me just clear this up for a sec. Actually, this chart will be better. For those that haven't seen my previous Bitcoin overview, I'll give you a quick reason to what's taking place. And let's see, where are we? So this is my target based on the fib extension. So these are potential targets with this bounce. I don't expect it to go that high, but I've still outlaid it, and at the moment I think the bottom is in. That is in. It's ever so close to the 200 moving average on the weekly, so it was close enough, and it's also got a clear fib level. Let me see where that is. So what I did, just to measure that bottom, it's from the swing low to the swing high. No, sorry, wrong way. We want to do from there to there. And what we had, give or take, if I was to remove that, whoops, it's close to the 1.272, or if we was to do from there to there, it's a 0.618. Right there. So the 618 and the 200 moving average gave us confidence for a nice entry, and we had our ABC correction. So let's see so what we had here is a selling climax, another selling climax, and this is our selling climax here as well. And every time we have a selling climax, we have a nice bounce, and in this case it was consolidation or accumulation, and we had the reversal. Here, this selling climax, we only had a bit of a wick off accumulation, and then there was a failure, and it dropped. So we want to get rid of this chart, don't need that. And so what we have, actually, this is the best chart I think we can do. So I'll line this chart, and let me see if I can bring it out. So basically what I'm showing you now is a theory. So what we have, let me just change the color. Okay. We have is the top. That top equates to this. So what you're seeing here is the wick-off cycle. So I'm not going to cover this left side because it's pretty much a waste of time at this point. Then we have distribution coming down. So pretty much distribution, that midsection equates to this. Then we had this potential accumulation and a reversal, and we got confirmation that it failed right there, perfectly there. Now we have this middle section that is so far looking in accordance to our plan, and then we have this last final dip, which is the accumulation, and that is the hardest part. And if I was to find out, give me a sec, the targets. Whoops. The targets, where did I draw it? I had it then, didn't I, before? So you can see the fib extension. There's a number of ways I've done it. Let's just do this for a sec. Put that in there, and I want to get rid of that image. Now, if I also get rid of that one, you can see that my reference points. Let's just get rid of these as well. Bit nasty. So you can see my Fibonacci from the bottom. So I use the bottom, I use the top, and what we have is we have the 618 right there, which is 11,000, 12,000 roughly. You could really get there, but anyway, we got this volume profile, which is pretty much peak volume profile. So that is going to be a major support if it ever even gets there, and you can see that historically that was a strong support. I don't think it'll get that low. What I have is the 0.5. The 0.5 equates very well to, give me just a sec, to this to this level here where there was previous demand. So between here and there, it's a gap, really. There's not much activity in terms of volume. So we had a bull run, and there wasn't much delay until we got to that level and that level there. So that equates to the 618 level and this area of interest, which is pretty much the 0.5 fib level, which is about 16k, mid 16s. And then we got this other level based on Fibonacci and previous resistance right here. So what I've done is aligned the Fibonacci retracement. So if I was to do this, I did the Fibonacci retracement, and you can see the point 1.618, which is probably a good spot, which 18,000, and if it's a dump, a real what's the word, capitulation, we might go a bit further down to the 14k. I'm hoping it comes down to the 14k, but I will have my averaging in. So my strategy will be is to buy at the 0.5 and keep on capitulating. If it's pulling down, I'll be looking to buy there, average in. So these are the areas. If you want to do a catching, dropping, these are the areas, and we might even get lucky there. So I have some money there. If it really, depends how it drops, doesn't it? But this level is definitely an area of support. So this white box is where I think we'll range for a while. Okay, so we'll probably range here with some sort of accumulation, and then break to the upside and then back down again. So we've got all these targets that we potentially could play. The volume, that is the real strong resistance, which is about 41k, with the 618 as well. So T2 is probably 38 to 40k is probably the strongest resistance. It's got all this area where there was historical resistance. I don't see it going past that, and so that's what I got at the moment. So hopefully, give me a sec, get a phone call. Okay, so that's what I got at the moment. So in essence, that is the big picture. Nothing has changed. If we look at the Nasdaq at the moment, moving close. We have a clear range. That's our bottom. Current resistance could be inverted head and shoulders. And then we'll look at the next level and the next level and so on. But this is going to be a trend line that is going to hold Nasdaq back, and that will correlate with Bitcoin in some way. And what I suspect is we have this 1, 2, potentially 3, and then a breakout. So I'm looking for that bullish move, and if we get above it, then we'll potentially find that level of resistance, as you can see that. So this is sideways, might come back down for a double bottom and then continue on, and if it's really bad, then it will drop. Well, it could probably just drop there. So I do see this level price action sideways for a while and then drop to this more interesting, which the 200 moving averages and the strong support, and that is within this structure. And we'll change our minds if we break this level here. Then we'll look for a stronger move. But based on the Nasdaq, SP 500 is aligned. US dollar is pretty much looking strong. There's reasons why the market is playing the way it is, and hodling is not the solution. And if you were if you look at Luna, you didn't have to be in that position. Obviously, some people had their account or staking locked in, and it was a risk that people took. I don't have any staking. I do have staking, but from a different perspective. So if we were to look at Luna, just to entertain you guys, we are trading Luna in the group. So come and join us, have some fun. Might pick up some tips. And so this is my Luna chart. Very difficult to trade, but anyway, so now I'm looking at the stop loss. So if it's definitely going to come back down to this level here. But the point is let me just get a point here. If this drops, we'll come back down to this level, potential buy. And at the moment, I'll see in this range, this fib fan. Now the question is, what lessons could have been learnt, and this is not hard. And a lot of people made mistakes, and all you have to do is just, let's see how we go. We don't want to look at that part. Jeez, can't fix up the chart. Oh, that's right. They got rid of the chart, FTX. So Luna's been removed from, bummer. Also look at Luna. The historical charts there. Okay, good. So all you had to do, realistically, whoops, for those people that weren't paying attention, all you have to do is just draw a line, really. Let's just do this. Just do your trend line. And realistically, we can do another way. Just give me a sec. So this trend line was a good gauge. And then we had our neckline. So depending how you traded it, I got a Luna. I got out of it somewhere up at the top. So if you were to enter at the top, you got to risk manage in a big way. The thing is, the market structure. So what we have is probably bearish divergence there. Breaks down, finds support. Now this is head and shoulders, right? Clear area of exit. Irrespective of what Luna did, that was your exit strategy. We could probably do that as well. So we've got this line as well. So people have plenty of chances to get out. This is a topping off structure. The higher highs aren't significant. So if you know what you're doing, hodling is not going to help here. This is crazy. And you can see that. It's a ascending wedge, really. And as soon as that market structure broke, you're supposed to get out. No one's going to know this is going to happen, but you should have your stop losses there. And people who don't know what they're doing, they're going to suffer. So if you want to learn this type of basics, you can come to my group or come to my website, or just watch my videos. You'll learn. Or the streamings that I do, live streamings, you'll pick up stuff along the way. But there was no reason why you couldn't manage your risk there. That was just being greedy or just being wishful, but you can't do that. Anyway, I've been bearish ever since this level here, and which equates to Bitcoin, I suppose, where it was going sideways. And I wish I traded. I wish I entered the short there. That would have been a life. I'm sure a lot of people have made a lot of money by shorting there. But anyway, that's the case. Look at that crap. Far out. Anyway, so the theory is, if we buy here, and if there's ever a slight chance that it's going to get back after a few years, $100 investment or whatever you put in, and there's a few years from now, there's a potential to really spike to $1. And some other coins have done it. Just done it. There's a few other ones that have done it, where they many years later they spiked. So I'm taking a chance, putting $100 down here. I have my stop loss, like I showed you, and we are trading Luna with that possibility that with that slight possibility that the market could go up. That little bounce with $100 was about 50% move. Anyway, just assuming that they haven't given up on Luna, but that's my take on it. I'm going to wrap it up there. Unless you've got any questions, I'm pretty much done. But hopefully you've picked up a few things to look at. And yes, I do expect a bounce. but a lot of volatility sideways before it makes a nice breakout. It might be something like this, bit of accumulation. And if you look at other areas where every time we have a drop from the top, it goes through phases. And in this case, you can see how we had and then down. So it is always the market doing a 1, 2, 3 move. So that's our 1, that's our 2, that's our 3, yep. And then we have our A, B, C. Similarly, that's my 1, that's my 2, that's my 3, and we have our A, B, C. So if the market does this, based on this historical price action, I think we're going to have something similar to that effect. And this is the range that I'm pretty interested in. You can see the volume profile, very strong there, so I don't think it will go below that. This is just above here. This is the target for a number of reasons. 0.5, Fibonacci extension, whole bunch of stuff that I just went through before, and that's a wrap. Trading this range is going to be difficult and volatile. If you spot trade, you just hold on. Find the dips and buy the spot, but you've got to know what you're doing when it comes to leverage. If you don't know how the strategies for leveraging, don't do it. You get wrecked, because there is a chance that this could easily come down. That'll be a good time to leverage and then go back up. Anyway, I'm wrapping it up. Well, Discord link doesn't work. Okay. What I can do, Discord. Just give me a sec, guys, and I'll fix that up. Here we go. This should work, right? I'm just going to paste it there in the commands, and yep, you can come in. So that should work. Okay. So in there, come along, and I'll give you the profile to look at some of that stuff. But that is our structure, and we keep. There's a lot that I haven't finished with, but I will. And it is a 10-day trial. You can come in for 10 days, and then later on, when I enable the bot, you can subscribe if you want. The Telegram channel is already bot orientated, so you can, if you go there, you'll pretty much get a 10-day free trial, and if you like it, stay, and so on. Anyway, and the last part, if you look at this chart, my website, that's the website. Yeah, there's free courses. I'm gonna it's not the, yeah, at the end of the day, you just don't need to register, just click in there. And these are the basic fundamentals. I will be adding more and more as time passes, but they give you the key